Hi, my name is Vicki. I'm the Accounting Partner Director here at Source Advisors. Source Advisors has been around for nearly as long as the R&D tax credit scheme itself, and we continue to provide support and assistance for accountants and their clients. Welcome to At Source, our series where we talk about all things R&D tax. Today, I'm joined by Akshay, our IP and policy lead, to discuss all things Patent Box. Hi, Ash.
Hi, Vicki.
Let's just go back to the beginning. Do you want to give me a little bit of background about the Patent Box regime and why it was introduced?
So the Patent Box regime was introduced in 2013. It sort of is a follow-on from the R&D tax regime. So the R&D tax regime pretty much incentivizes research and development and the sort of initial sort of steps towards commercializing your products. The Patent Box follows on from that. So it incentivizes businesses to make sure that they're protecting their innovations in the UK, and also to foster jobs, facilitate jobs, and to bring about innovative products. Essentially, it's a tax regime. So it lowers your corporation tax for any associated profits, so anything associated to patented inventions, down from your sort of usual rate, 19 or 25%, down to 10%.
Just give us a little bit of an idea of the scope of Patent Box. Obviously, everyone's heard of patents, but is it UK patents, US patents? Are there only certain patents that are applicable to Patent Box, or anything else that's relevant, exclusive licenses? If you just give us an overview of what's in scope, that'd be great.
Yeah, that's a good question. So in terms of what's in scope, so we're looking at specifically UK patents, European patents, patents that are granted in European Economic Area countries. So a few examples of that might be Estonia, Germany, Austria. That's kind of your breadth in terms of the types of patents that would be eligible for the scheme. I'd say the clue is in the name in terms of Patent Box, but actually there are other rights that also qualify. So the main one is plant breeders' rights, and plant breeders' rights relate to new plant varieties that might be created. So you might see in the food industry or in agriculture that businesses would produce new plant varieties to produce products, fruit and vegetables that have specific tastes and characteristics for their products. So those are also included into the Patent Box. Just to touch on the earlier point around sort of exclusive licenses. So a business has to either own or hold the patent itself in the way that I've sort of explained, or it may have an exclusive license.
Sure. So when it comes to a business, they've put an application in for a patent. At what point do you opt into Patent Box? And can you opt in straight away? Obviously, there's a patent pending period of time, and then you have the patent granted. So when do you opt into Patent Box, and does it have to be granted, or can you opt in when the patent's still pending?
Yeah, so opting in is quite a consideration, and it's very much, I would advise to kind of look at it at a case-by-case basis, but essentially you should be thinking about it as soon as the patent's filed.
Right.
So once the patent's filed, you may be able to capture profits that are related to the patented inventions, not from that point, because you'd have to, once it's granted, your patents are granted, that's only when you can claim. But you may be able to capture profits arising in that period. And so electing in becomes quite a consideration around that time. So that's when you should be having the conversation around, should I be thinking about Patent Box? Should I be electing in? That's when you should be thinking about it, and not just when the patent grants.
So just to expand on that a little bit, are there circumstances where businesses have got patents, maybe even granted patents, but shouldn't be opting into Patent Box?
Yes. So with that, you've got to think, so you have to have profits arising from the intellectual property. You can also have losses that arise from the revenue streams that are attached to your patented inventions. And so what we don't want to do is we don't want to be in a position where you would have what we call an IP loss, and therefore IP losses essentially do harm your future claims. They could also harm claims that other entities are making within your group. So for that purpose, it's for sure worth thinking about, is it worth opting in? And there are a few considerations around that.
Great. So obviously, as our head of IP and policy, you obviously see a lot of patent box claims,
Yes.
not that we've done, but maybe that you reviewed from other third parties. What would you say are the most common mistakes that you see in patent box claims?
Yeah, so some of the common mistakes that we see, they kind of, you can sort of split them into two areas. So you could look at kind of the IP itself. So the qualifying IP. Am I a qualifying company? Do I have qualifying IP right? So do I have a patent, a plant breeder's right that is eligible for the scheme? So that's one area. Another aspect is in terms of the calculation, and it's making sure that everything that you put into it. So in terms of, what the linkages are between the patents and the revenue are correct, understanding actually what the scope of the patent is specifically. And that's one thing that we see is kind of a common issue, that you might have an understanding of what your patent might cover. However, it's what's written in the claims that's important. So the claims is a section within the patent that gives the technical scope of what's essentially protected, in a sense. And so usually patent attorneys will work to try and broaden that scope as wide as possible. So you may think you have a patent over a component that's within a product. However, that component or the thing that you've patented could be at a wider scope. So, and we usually see that. So it's really understanding what's been written in the claims. Another example of that would potentially be around process patents and understanding, actually, I know I've got a patent over the process, but do I have a claim against the product that arises from that process? And in some cases, we've seen that clients have not clients, but, businesses that we've worked with, have not basically picked that up in their initial sort of assessments. So it's making sure that you get that right.
Yeah. One of the comments that we hear on quite a regular basis from accountants is, patent box is easy. It's just a calculation. It's just, it's just a bit of arithmetic. And obviously as accountants, they're very comfortable in that space.
Yeah.
But I do listen to you. And I know that one of the things that you say on a regular basis is the importance of understanding the IP. And patent box has to start with the underlying technology and understanding, what even the patent covers, as you were just saying, to then be able to assess what the sales are that have derived from the patent. So don't go into rafts of detail, but when you're looking at streaming profits for patent box, just give me an overview of what needs to be done for that streaming method.
Sure. Yeah. I mean, the streaming method is the only method that we would use now for patent box. So the old rules allowed for a bit more flexibility, but the new rules now very much focus only on streaming. The first thing to consider really is around the income and the type of income that we're looking at. So as I may have mentioned before, around sort of sales income, there is also licensing income and other things that you might have to consider. So what does my income look like? That's the first aspect. Secondly, it's all about trying to then understand, having looked at the way the patents are mapped to the revenue, how is it best to stream my income? So there are different ways that you could do that. So just to give an example, one of those might be by product. So that might make the most sense, but it's not the default method, but there are others. So that's another thing to consider with regards to the whole sort of streaming elements of the claim. Going a bit further into the calculation, you've got to consider what we call sort of routine profits, or profits that might be related to routine activity. That's called the routine deduction. And so you'll take a 10% haircut essentially on the calculation for that. And there are some specifics around what you've got to consider for that. So the next aspect is the marketing asset return. The marketing asset return relates to sort of profits that might arise through brand recognition. So, companies like Apple and Samsung are very much known for their brand. And so there will be expected sort of footfall in terms of profits that will be attributed based on that specifically, and not the patented invention itself. And so you've got to, again, potentially take a haircut on that. And the last aspect is very much around R&D, and just making sure that you have what we call track and traced your R&D expenditure over the period that you've been claiming, or prior to making your first claim, just to make sure that the R&D sort of fits the specific rules around, basically the R&D being done in-house, and not so much acquired or through subcontractors potentially.
So if you're thinking about the patent box process as a whole, what needs to be considered? And are there areas of complexity, such as group structures, that need to be assessed and considered, in more detail?
Yeah, for sure. I mean, groups is definitely one area of that, and just making sure that both from a licensing perspective. So as we touched upon before, licensing is one way, exclusive license is one way of being able to enter the patent box scheme. So just making sure those structures are correct between the group entity and perhaps because sometimes IP is sat centrally within another group company or a parent that is abroad. So it's just making sure that those aspects are watertight. Also, in terms of complexity, I did mention a little bit around marketing asset return and R&D. I think they are complex. So it's just making sure that, again, doing those correctly is something that's not particularly easy. And that all depends on exactly what you're putting in the top part of the calculation with regards to what IP I hold and what the revenue relates to. So that's basically my sort of takeaway with regards to that.
Sure. So somebody that is very experienced in all aspects of patent box, I guess what I'd like to know is, what does good look like? So if I ask you what your top 3 recommendations would be when it comes to the patent box calculation and what to consider, what would they be?
So I think firstly, just understanding the full breadth of your patent portfolio. I've worked on different instances where the company doesn't really have a full hold on all the IP rights it holds, qualifying IP rights for patent box purposes included. So that's one aspect, and including the scope. So the scope of the patented inventions, what it actually covers from a claims perspective. So you understand the full technological breadth of what you've protected. The second aspect is very much around sort of the strategic elements. So understanding kind of, okay, I know what my portfolio looks like now. However, I know my business is going to go into a different direction or a certain direction in the next 5 years. So what does that look like? And will my IP underpin that? And even from a tax planning perspective, thinking about future patent box claims, well, what aspects of my portfolio are kind of under risk? So might end up expiring, or we may think that, you won't end up paying the renewal fees, or it's just come to the end of its term. So what rights fit that bill? And then also, well, what rights do I have to try and put in place for the next 5 years to cover the activity that we're going to be doing in the next 5 years and the profits that we might accumulate over that time? So that's probably my second takeaway. And then my last is really thinking about what needs to be submitted to HMRC as part of the claim. And that's very much just around, you have to submit some pieces of evidence with regards to what IP underpins your claim and also your assumptions that you made in your calculation. And even though it's not a requirement, it's something that HMRC are now a bit more attuned to.
So actually, to bring this to a close and to expand on that a little bit further, my final question: we are aware that HMRC has written to patent box claimants fairly recently, quite a standard generic letter, really just directing them to assess for themselves whether they have considered GFC 9 and whether they are meeting the requirements. Do you think that is indicative of any scrutiny that's going to come onto patent box? Do you think it tells us anything about where HMRC may potentially are going to look at the scheme in more detail? Obviously, we've had a lot of scrutiny around R&D tax, not so much over patent box, but the fact that HMRC are asking the questions and basically making or suggesting people should consider whether they are taking due consideration over their patent box claims, do you think that's indicative of anything?
Yeah, it's an interesting question. And I think, obviously, you've touched upon that part around R&D tax and kind of what we've seen over the last few years in that sphere. And those that would have been putting together patent box claims over the last few years will know that the level of scrutiny is probably not at the same level as R&D tax. However, there are now hallmarks of HMRC being a bit more tuned in to basically the claims that are being submitted and actually what's being submitted in terms of evidence. And that again, just sort of going back to what I mentioned in the previous part was around what IP underpins your claim, and that is not always sort of been submitted to HMRC as part of claims that we've seen anyway. So it's important to get that right, but then also to make sure that you're making sure you've got your assumptions in there as to what you've assumed in the calculation, how you've arrived at each of those steps that I talked about before in terms of marketing asset return, routine return, and R&D fraction, how you've streamed, what kind of income are you looking at. So with all those sort of factors, it's sort of summarized in GFC 9, to be fair, but HMRC becoming a bit more tuned in.
Yeah. And I think as part of that, it just is a reflection of claimants need to make sure that they have got the substantiation for anything that they go to file. So have they got the evidence? Have they got the calculations? Have they got the background to then be able to substantiate, as I say, should HMRC ask the question?
Yeah, and as you mentioned, that letter, claimants have been receiving letters from HMRC just pointing towards GFC 9, and we've seen that over the last few weeks now. I mean, we're in October, so that's kind of what we're seeing. So, a publication of GFC 9 in November last year, these letters in October this year, you are just seeing HMRC being a bit more tuned in.
Yeah, great. Thanks, Ash. Really useful content, and hopefully everybody watching has found that really informative too. Thank you very much.